Well, it's not for me to declare victory. That's for the boss. That would be for Christine Lagarde. But indeed, I think there is a broad consensus that we are very close to target now, and so that the job is mostly done. Now, if I look at the balance of risk, I think now the risk is maybe a bit more tilted to the downside on inflation and growth. We've had 2 years of relatively slow growth in Europe. We're waiting for this recovery, but of course with the uncertainty it might be again delayed a little bit, although the economy is resilient. So if anything, I think if we would have to move more, I probably would be on the downside, a further cut. I'm not pleading for one, but I think if there is any discussion, it's more on that direction.
But if you look at the economic outlook, perhaps the economy could actually do with lower rates. So why are you not willing to cut them further?
Well, again, I mean, that's part of the story. We are close to target. If we could re-anchor growth close to potential as well, then it would be great. And we are going to see in the coming months whether the recovery, which is in the production, materializes. If it does, then it's an ideal scenario. We would have a recovery, would be close to target. If it does not, then we may have to be a bit more supportive.
The euro is at the highest compared to the dollar since more than, I think, 1,000 days or so. I just read that statistic. How does that factor into your reaction function in setting monetary policy?
I mean, we don't aim for a given exchange rate, but it's of course part of the story on the inflation and growth front. And that's where we had some surprise, because we thought that the dollar would actually appreciate with the tariffs, and we see a movement in the other direction. And it's a little bit the combination of a strong euro, lower energy prices that of course push our inflation in the projection for a number of quarters below target. Essentially, I think we can look through that to the extent that we have the recovery. And of course, we have only one objective, which is inflation. But if growth would remain on the downside, then there might be room for a little bit more action. But essentially, we're very close to target on both fronts.
One major concern for the ECB was the wage pressure. That's abating now. Where do you see more risk to inflation coming from if you're so, would say, concerned about inflation?
But indeed, for a long time, my concern was the stickiness of inflation, services inflation essentially 4%, and the wage development. Our projection have been performing quite well over the last 2 years. We expected wage pressures to come down, and they are coming down. So there again, I think it adds to the comfort we have that we are moving in the right direction.
Let us broaden it up a little bit and look at also the trade conflict, because clearly while the UK has already some sort of trade deal, Europe has not agreed on anything. Is that uncertainty also weighing on the economic outlook?
It does. I mean, the tariff as such weigh on economy, but the uncertainty as well. Maybe less so than a few months ago. I mean, there is this understanding that we now see more or less where we should land, which is probably with a basis 10% tariff. We'll see, which as such will have some impact on the economy. But if you look at the order of magnitude, the fiscal expansion in Germany is a game changer. You have one big country in Europe with some fiscal space, and they are using it. And if you look at the order of magnitude of the two, plus probably lower energy prices, that is still a good reason to believe that we are going to have this recovery, maybe again delayed a little bit. So, I mean, there are some risks to the growth and to the projection, but they've abated quite a lot, say, compared to 2 months ago.
The fiscal package in Germany, do you think it has spillover effects also to other Eurozone countries?
It will. I mean, Germany is big enough and the package is big enough that it will have an impact. And it's also a little bit creating certainty where we have the uncertainty from the international environment. It creates some certainty in Europe that, Germany is going to move in the right direction. It's the biggest economy. I'm from Belgium. We are very dependent on the German economy, and so the spillovers will be there, yes.
Yeah, do you feel that Germany, the new government, so to say, is filling that void the last government has left in terms of leadership as well?
Well, there is clearly a change. It started with the previous government. It actually accelerates to some extent with the current one. You know, people have been pleading for fiscal support in Germany for a long time, and the Germans were saying, you know, our economy is running at capacity. Why would we support it? And now it's not running at capacity. We see that the industry is suffering. And guess what? We have fiscal support in Germany, so it's great.
But besides the infrastructure bill, we of course have that huge defense bill, which other countries might replicate in the euro area. And the key question is how to finance it. Would you advocate as well more common debt?
That's a political decision. A common debt would not, as such, reduce the problem of, you know, finding the money somewhere. There would be some form of solidarity and common debt, but at the end of the day, the real challenge is that it's creating some additional pressure on the fiscal positions. And some countries have a deficit which is too high, which is the case for my country, and more will have to be done over the medium term to get that under control.